for you tomorrow at day 2. You won't want to miss it. You'll be hearing from Stripe, Amazon Pay, eToro. You'll be hearing from Revolut, Blockchain, Western Union, and the Irish Prime Minister on Taoiseach Leo Varadkar will be on stage here tomorrow. So for our final panel of the day here at MoneyConf, we're going to be looking at the fall of Bitcoin and the rise of blockchain, asking if the former is at this stage just going to end up as a footnote in fintech history. Our next panel can shed some light on that. So please give a warm welcome to CNN's Ivana Kottasova. She's in conversation with Max Keiser, founder of the Keiser Report, Jalak Jobanputra, founding partner at FuturePerfect Ventures, and VP at Coinbase, Adam White.
Hello everyone, thanks for coming. I'd like to start the session with a little show of hands. Who here owns Bitcoin?
Okay.
Okay. Keep your hand up if you bought it in the last year. Keep your hand up if you've lost money on that venture. Okay, so most of you actually made money. Well done, you got in at the right time. Let's start with that hype.
That's such a downer. I mean, to start off, who lost money on Bitcoin? How many bought it at $3?
Well,
$3. Yeah.
Well done. You win. You win. How detrimental was that hype that we saw at the end of last year, beginning of this year? Everyone talking about Bitcoin, even my parents asking me whether they should not invest. Actually, that's not true. My friends did. Let's start with the panel. Was it good news or bad news for the future of Bitcoin?
I'll take the position it was good news overall. So I work at Coinbase, and hopefully many people have heard of Coinbase. We look at ourselves as the easiest on-ramp into the cryptocurrency space. So if you're looking to buy $5 or $5,000 of Bitcoin, many people download our app to do that. Obviously, we saw a wave of retail capital enter the space through 2017. The market cap of all cryptocurrencies ballooned, anywhere between 10x and 50x, and we saw at the greatest amount about $800 billion of market cap of all cryptocurrencies, with Bitcoin being the majority of that. Net, we think that was a positive thing because with it comes new capital to the ecosystem, but also comes with it the attention and awareness of a larger public. And it comes with it too, probably most importantly, developer interest. So I think what most people fail to realize is that right now we're in the what we call investment phase of cryptocurrency, of Bitcoin. People are buying crypto, they're speculating on the price, and they're storing it, and that's fine. But we have to get to the second phase, what we call the utility phase, where people are actually using cryptocurrency to solve real problems. And the way to get there, in our opinion, is to have really smart developers enter the space and build on top of these open technologies. So from my perspective, as we saw this kind of run-up in price and a recovery, net, it was a good thing because it brought a lot of new interest.
Jalak, all those headlines and the buzz, good, bad for the future?
I think it's good. I agree that awareness is a positive thing. It got a lot of, especially younger people, into investing in the market. Now, stocks and other assets have been not the easiest to for a large percentage of the population to participate in, and so this is an accessible asset class. Now, what I worried about is just people speculating, taking out, second mortgages because they didn't realize the risks associated with investing in the crypto. But I think it just brought a lot more investors into the market, and I believe that we need to offer more assets to a broader swath of the population.
Max, you bought at $3, so I guess good news for you.
Well, I mean, why this idea of hype? Why are we singling out Bitcoin? I mean, what about the hype in the bond market? It's at a 5,000-year high. What about the hype in the stock market right now? What about the hype in London property market right now? I mean, there's a lot of hype out there in markets all across the land. That's the part of the way markets function. It's not unique to Bitcoin.
Well, the bubble was pretty unique. I mean, compared to all the previous bubbles.
I mean, your bubble is my pullback. I mean, there's a correction in play. The target's still 100,000, and it's taking on fiat currency, and we've just seen the beginning, the earliest innings of this. So anytime you're involved in any market, there's volatility, and Bitcoin is similar in that regard, but it's not unique. I mean, when the bond market crashes or the U.S. dollar crashes, I mean, who are we going to go to and say, why did you hype it? Where's Jim Cramer going to be when he's hyping stocks all day long on CNBC? That's completely irresponsible. Okay, who's calling him to account, right? So I don't think it's hype so much as the natural edge.
Well, CNBC was hyping crypto in a big way.
To be fair, it was kind of focused on Ripple at $3. I'm not sure you can put that in the same category as Bitcoin, but they did kind of come late to the game. We were covering Bitcoin when it was 11. The Keiser report has created millions of crypto millionaires all over the world. CNBC came very, very, very late to the party, and they caught the tail end of a speculative surge. Bad on them. They suck.
Let's move on. Let's not talk about our competitors. Jalak, I'm glad you mentioned Bitcoin as an asset class. So my next question is, everybody is talking about Bitcoin as a thing to invest in. Right. How do we bridge that gap between Bitcoin as an asset class, Bitcoin as a means of currency, means of value exchange?
Yeah, I think it's, I mean, obviously it's kind of morphed into this store of value investable asset, which wasn't its original purpose. And I find that evolution very interesting. I don't think we've seen the end of that evolution. And we're certainly seeing a lot of development happening on the Bitcoin blockchain, kind of behind the scenes. So I think it's still to be determined what it's ultimately going to be. And it may be an investable asset, maybe a new reserve currency. It may be also a transaction mechanism. And so I'm tracking all those use cases, and I haven't written any of them off yet.
Adam, you come from that background of exchanges, so obviously asset class, but how do we move on? Do we move on? Do we want to move on?
So I think what's important to remember is Bitcoin's the first of its kind, right? It was the first open protocol to solve something called the Byzantine generals problem, which was previously what many thought to be an unsolvable computer science problem. From that, we've seen thousands of other digital currencies effectively copy and mimic a lot of what Bitcoin originally introduced. That's important because what we're seeing happen is innovation on the edges. The Bitcoin developer community, which is global, pretty darn diverse when you look at it, recognizes it has a very large network, and in many ways it's being used as a store of value. Right? We're not wandering into every coffee shop paying with Bitcoin, and that's okay. Over time, though, what we're seeing happen is that these new crypto assets, Ethereum is a great example, they have a much larger kind of surface area. You can develop more things like smart contracts on top of them, and that's allowing a lot of really unique and interesting things to happen. And we're watching Bitcoin be a little bit more safe, a little bit more stable, a little bit more secure in many ways with the type of methods it uses. I think there's going to be a place for both into the world. You're going to have some cryptos that are going to gravitate more towards electronic payments or solving new utility issues. Others are going to sit there as a way to kind of store value in a process that's decoupled from the existing financial system.
So you see it rather than development, both of these working next to each other in parallel?
I think they're both going to work side by side, exactly.
Max?
At the present, Bitcoin's use case is store of value. And that will continue until the price reaches some equilibrium point, let's call it 100,000 per coin, where you'll be seeing it more used as a medium of exchange. At some point, it then becomes a unit of account as things are priced in Bitcoin, as fiat money disappears. So similarly, gold is a store of value, and from time to time, it's used as a medium of exchange. It can be used as a medium of exchange. Central banks own gold. They swap back and forth. Central banks will be buying Bitcoin as a strategic reserve, as will sovereign wealth funds. As we see a transition from fiat currency, which is unsustainable. The average lifespan of a fiat paper money currency is 27 years. Every single one has gone to zero. None have survived. We only have gold and now Bitcoin.
How do you know that Bitcoin will survive? We've been,
Because it fulfills Aristotle's 4 conditions for sound money. and which has been around for thousands of years, that definition, and it does so electronically. And as long as people want to trade, as long as there's an instinct to trade, as long as people still populate this earth, they will want Bitcoin to trade with.
Do we need to first overcome that problem with mining and how energy inefficient it is for us to move on?
I'll say quickly that compared to what? Compared to the fiat money world that's supported by the Pentagon, the dollar is a multi-trillion-dollar defense contracting nightmare that kills half of my tax dollar in America. That's unsustainable. Gold mining, very unsustainable. Plus, I just put a lot of effort into a company in South Africa called Sun Exchange. So they'll be using solar energy to mine cryptocurrency. So using sustainable energy and marrying it with the blockchain. You can, for $10, you can buy a solar panel. They harvest energy from the sun. You get paid a dividend in crypto. So you're marrying solar, crypto, energy. You know, it's a beautiful marriage.
And I would add to that. So right now, Bitcoin uses a protocol called proof of work, and that proof of work is what people think of when they think about the unsustainable amount of electricity or energy that goes into the mining operations. There's nothing that beholds Bitcoin using proof of work, right? These are open protocols that anyone can write to, anyone can submit GitHub requests to change. And we may see something like proof of stake, which is what Ethereum is moving towards, which says instead of having computers around the world compete via computational cycles to solve the next block, instead, we're going to rely on rationally economic actors that vote via the stake they have in this asset. So there are other options that are far less environmentally impactful, and I think we'll see a number of them succeed.
Yeah, and I agree. I think looking at it statically where it is now, I mean, technology has never remained static. I was at Intel for a while, and if you look at the Moore's Law and the processing, more efficient processing power over time, we're going to see that happen. We're going to see alternative energy forms, and we'll see also the technology and different consensus mechanisms emerge. So I think the combination of all of those factors is going to make, even if we have proof of work, it's going to be a lot more efficient down the road and less consumptive.
So let's think for a moment about Max's vision for where we can get with Bitcoin. What are the biggest hurdles to achieve Bitcoin being the form of value exchange? Is it customer trust?
Well, the adoption rate, you know, that's what we're talking about. So a company like Coinbase has brilliantly created an on-ramp. People can get into crypto, and they're opening thousands and thousands of accounts, and they are providing that experience. I think that in the future, the adoption rate will be driven as it has been since the white paper makes reference to the banking crisis of 2008, the Genesis block. And I think that these banking crises will continue, and that will drive adoption. Clearly, in the fringe economies like Argentina, Venezuela, they are mad about Bitcoin because their economies are in free fall. Those are peripheral currencies. When you have a major currency like the dollar, the yen, the euro, the pound enter a similar crisis, which I believe will happen, you'll have then adoption rate in those countries will spike as well as a way to store a value, as a way to preserve wealth, because the banking system is completely unsustainable. It will not exist as we understand it in 10 years' time. It will not exist. Central banks are an endangered species.
I might take a more moderated approach to that. I think a lot of that could be said to be true.
Are you going for a job at a central bank? Is that why?
So like Max said, Coinbase works hand in hand with government. So I think one of the big things that's holding back this industry right now is lack of regulatory clarity. In the US, where Coinbase was founded and we operate in, is a great example. That we have 4 different regulators that all regulate cryptocurrency is something different. The IRS has its digital property. FinCEN, a Department of Treasury, calls it currency. The Commodities and Futures Trading Commission calls it a commodity, and now the SEC is likely calling it a security. And the honest answer is that it's a little bit of all, because it's a technology that allows different applications and use cases, and they all resemble different forms of financial instruments. So from our perspective, we look at Coinbase's mission is to help fiat currency enter this ecosystem. We have to be the on-ramp. We have to work with kind of safe, trusted counterparties like banks and regulatory agencies. The lack of clarity and the kind of ad hoc approach, not just in the US, but internationally, look at Europe, look at Asia, look at parts of Latin America, makes it very difficult for businesses to succeed. It's ultimately achievable. It's going to be a hard process.
Max, at a point?
Right. So Coinbase rightfully has said that they work with governments and they have a great solution and an on-ramp. There are industry players that have chosen not to work with governments, who have chosen to not interact with regulators or to interact the least possible way with regulators, or to go jurisdiction shopping. So they'll go to countries where their money is welcome, their business is welcome. And so I think there's a dynamic evolving. I think that ultimately the regulators, in my view, are not really going to be helpful in the development of this industry in a strategic way, and that this is a self-regulating new asset class that we don't need those regulators. So I think that's an issue going forward. Obviously, that's a bit of a controversial issue. And again, Coinbase is a brilliant company and they do brilliant work. But I think that there's ongoing tension between crypto and regulators.
Jalak, would you like to be the judge of this debate? Should we bring the regulators in early on to make sure they don't come in later and just disrupt the whole thing?
I've been a proponent, and I have been kind of educating regulators. People consider that a bit of an oxymoron, but for the last few years around the world, and I think it's better because they are going to step in. I think the industry showed last year that they weren't very good at self-regulating. That's starting to correct, but given kind of the ICO scams of last year, that really woke up regulators who may have been more quiet on that front. So I do believe that there's this push and pull, though, and if you see cases like China, which shut down crypto, apparently, but you go there and there's still a lot of mining and trading happening through other means. I don't think you can just shut this down. It's like this whack-a-mole, it's like you whack it in one place, it's going to pop up somewhere else.
Is it then better to involve the regulators in the building process of this thing?
Well, I don't know if the building process necessarily. They're not technologists. I think we need to educate them on what this is about and the fact that they can't ultimately control this. This is decentralized. This is global. I remember I was in India during demonetization, and the price of Bitcoin was like $1,000, and back then the price wasn't that high. It was $1,000 more in India just because of what Max said, the demand. When people stop trusting their governments, and that happens on a regular basis, they're going to go to an option like this.
There's two points. One is it's uncontrollable in a lot of ways. The second point is that the regulatory community hasn't really earned our trust. You show me a regulator, and I'll show you an extremely corrupt organization. Look at the banking system in the U.S. A bank like Wells Fargo openly steals from millions of customers. They get a slap on the wrist. J.P. Morgan, hundreds of billions of dollars worth of fines for outright fraud. No regulators. Bernie Madoff was reviewed by the SEC 3 times. They saw nothing wrong. These regulators are weak, they're captured, they're ineffectual, they're corrupt. You show me a strong regulator, and then maybe I'll talk to them. But the reason it's created is because there is no strong, fair regulator. They all stink. So thank God Bitcoin is here to take the economy past the corrupt regulators and the banksters.
Wow.
I can see there's not very many regulators in the audience. What about the big players, the big banks? They've been rejecting Bitcoin for a long time, and then come December last year, suddenly they wake up. So there has been a lot of cooperation. Where do we stand on the traditionally big players in the financial market getting into the space?
So I'll answer this from what we're seeing at Coinbase. I think largely the conversation's been around public blockchains like Ethereum and Bitcoin and private blockchains. And what we saw banks kind of notably did in 2015, 16, and 17 is move forward with private blockchain instances. And while we think that's ultimately a good thing, I don't think it's going to be nearly as impactful as open or public blockchains like Bitcoin will be, for the exact reason the internet's been far more impactful than private intranets have been. Again, they can. It's not either or. They're going to complement one another. But I think that's kind of been the first conversation. The second one, and the one that we spend a lot of our time thinking about, is the institutionalization of this space. And that is the large banks, the hedge funds, the sovereign wealth funds of the world now beginning to move capital into this new asset class. And a lot of the work we do at Coinbase is building not just the products, the qualified custodian, the reliable exchanges, the prime brokerages, but also having the right regulatory licenses so that capital can move into the space. So what I see coming from banks right now is maybe a little bit of air being taken out of the room on these private blockchain instances that may still develop but are not going to revolutionize their work overnight, but beginning to look at crypto as a new asset class that ultimately their clients want exposure to.
Yeah, I mean, I think the key there is that it's come from the ground up. It's clients that have been asking for exposure to this asset class, and the banks have kind of been dragged into it. Jamie Dimon, 2017 September, called it a fraud, and then 2 weeks ago just hired a head of crypto strategy. And that's happened over and over again. And you look at Goldman, and so, and it's because of the demand from their clients. It's not a top-down strategy. It's bottom-up, and that goes with the ethos of what crypto and blockchain is about.
Max, I have an idea about what you think about that, but do you think they have something to bring into the space, or should they just...
No. They don't. They have really nothing, no value to add to this space. And which is Financial Times this morning said half banking jobs are going to be eliminated. Okay, all the back office. Okay, blockchain versus Bitcoin. Blockchain is great for banks because they take all those back office jobs of matching trades. I was a stockbroker for many years, and the whole antiquated system of matching trades and clearing trades is unbelievably Byzantine. And so this is all going to be done away with blockchain. Okay, so that's half the banks gone. What about the front office? The guys who just sit on their butt all day and just collect rentier-like fees for overcharging customers and doing nefarious things. What about those guys? Well, they will have a war of attrition where more and more of their customers disappear until eventually there's nothing left. So how many bookstores are there, freestanding mom and pop bookstores are there, after Amazon came into the space? Very few, okay? And they're just, there's no room for them. The answer is no.
No.
That's my short answer.
Right. So last one on Bitcoin, the question everyone is burning to ask, price in a year, in 5 years. Where do we stand?
Well,
Max, start.
You want me to start with me?
Yes.
I kind of want to see it get to that price at which John McAfee says he'll eat his own dick.
What was that?
Okay.
price?
Is that 100,000?
I think that was $1 million per
$1
coin. So, I mean, I'd like to see that, and I can have it on my show, and I'd love to have him eat his dick on my show. I mean, that would be great.
I don't wanna watch.
Now, do I think it's going to get to $1 million? I think if you look at the rate of compounding, it's pretty remarkable. It's almost 1% a day, and you just follow that compounded rate of returns. Albert Einstein said, the most powerful force in the universe is compound interest. That's a quote from Albert Einstein. So imagine if you're compounding at 1% a day. Warren Buffett's compounding at 22% a year. Okay, Charlie Munger, this Bitcoin price will be times 1,000 the price of the years Charlie Munger gets to when he croaks.
Right. Jalak, your price a year from now?
I think it's going to keep going up. I don't pay as much attention to the price. I'm more interested.
Is the price destruction?
Pardon?
There's the price destruction in the technology.
Yeah, I mean it's the technology behind it, and I think I think all roads and indications lead to more demand for this as an asset class. It's the most secure. It's fixed supply. There are a lot of things going for it that I don't see other cryptos necessarily fulfilling that store of value function. So I'm a holder.
Adam?
So from our perspective, Coinbase, we're one of the world's largest exchange operators. We tend not to focus on the price and explicitly focus on the process of fair price discovery. So we have over 20 million customers that every day are buying some crypto. We have some of the largest market makers and banks that
Just
are
give
making...
me a number, Adam.
So I cannot give you a number. What I will say in the kind of ethos of Max, I do think in our lifetime we will see this asset class emerge as something that everyone has a bit of exposure